catch up with our good friend after the Lunar holiday, Khiem Do, head of Asian multi-asset at Bearing Asset Management. Happy New Year.
Happy New Year.
Khiem,
Thank
good
you,
to see you. It's just crazy, isn't it? I mean, it was cold over the weekend. It's warming up, but it was still cold. And people sold, Sun Cake sold 900 apartments at a price like nearly double what the existing price was.
Yes.
And just as soon as people got those purchase and sale agreements signed, they put them back on the market for 20% more.
Yeah.
Isn't capitalism a wonderful thing?
It could be too wonderful. It could be too wonderful. I mean, this reminds me of the time in Japan where, property prices in Japan went through the absolute roof in the late 80s, as you recall.
Right.
I mean, the imperial city in Tokyo was worth the whole of California. You remember that? I mean, that was the peak of the bubble. But anyway.
What happened in Japan then? That's a very frightening analogy in some ways, because that was the build-up, right?
Yes, yes.
That was when the Nikkei was 40,000 or approaching 40,000, and then
Absolutely.
it tumbled to 6,000 or 7,000.
Right.
Is that what we're seeing in Hong Kong, China, with the beginning of these property asset spirals that a lot of people are talking about?
I think that there's a slight difference. I mean, I was a bit facetious in comparing the two.
No, you weren't. It was very scary, actually.
On a strictly basis. But no, the point is that, I mean, if you look at the stock market of Japan at the time, the Nikkei was trading on 60 times PE, 60. Currently, the Hang Seng is trading on 13 times. So there's quite a big difference between the two. But at the moment, I mean, the thing is, okay, we heard of mainland Chinese buying, but also the fact that interest rates in Hong Kong are so low, and yet the economy actually is doing quite well. So that I think is fueling the property boom, because interest rates, you can get them at 0.7%.
I know.
So I think that people think that, 0.7% for a long time, so I can afford this. So they jump in.
I have an aunt who loves to speculate in property, and she bought an apartment for what I thought was an overpriced $25 million, and the mid-levels for something I thought the market price should have been about 20. I said, why are you willing to pay prices like that? And she said, well, you have to build in about a 20% premium for the fact that money is cheaper than it should be. I mean, it is so synthetically low, you can't really get price discovery. You have to kind of pad it to make up for the fact that, money is so easy to come by that it's, obscenely cheap right now. But they're starting to tighten a little bit. You look at the Chinese, at least they pulled the triple R move right before the holidays.
That's right.
And then over the weekend, they started to tell banks to rein in on working capital and personal lending. As well. So where is the equilibrium cost of funding going to be? Are we still some ways away from that?
Well, as you appreciate, Bernie, I mean, in China, only the RRR increase have taken place, but interest rates actually haven't risen that much. It has risen a little bit. But for an economy which is growing at about at the nominal GDP rate of about 13 to 14% per annum, and interest rates are only 5 to 6. That's still very low, So if they want to tighten, they can. If they want to tighten seriously, they can do a lot more. Because the economy is booming in China, and Hong Kong is doing well too. So yeah, you can understand why people are so excited about the property market.
You get a lot of warnings these days about a market which moved up 80% last year and how a crash is coming. But you're a lot more sanguine about the situation. You don't think things are going to be tumbling. You don't even seem to think that we need to talk about a hard versus soft landing. Maybe we shouldn't be talking about any landing. How come you're so optimistic? Are you a golden tiger? You must be born in the year of the tiger.
Good point. No, I think that I think that unless you take a view, like you said, unless we take a view that there will be another recession coming by the end of this year. So unless you take that view, you have to be bullish on the equity market at these valuation levels, because for the H share index is trading at about 13 times earnings. Hang Seng is trading between 13 to 14 times earnings, and we have had earnings growth last year, and we are going to have earnings growth this year. Unlike the US, which didn't have earnings growth last year, they had earnings decline. But this year, obviously, the US is going to enjoy earnings growth. But we've been enjoying earnings growth last year and this year. So we have the earnings growth to back up the PE. And as a result of that, unless you take a very dim view of the world, you should be buying equities right now.
Okay. We're going to get, over the course of the next days, we're going to be getting numbers from Taiwan today. We're getting Thailand. We'll be getting there's going to be a lot of pictures about how this recovery is going ahead. And for the most part, it looks like recovery is very, very intact.
Yes.
We talk every 6 weeks or 8 weeks compared to before the end of last year.
Yeah.
How has how is your multi-asset approach changed right now? Are you even more bullish on equities? I mean, equities as an asset class, do they comprise an even bigger part of a model portfolio that you prescribe?
Yes. Well, in the last quarter of last year, we did take a little bit of profits in equities. We thought that some of the prices were a little bit elevated. But we want to actually use the weakness to buy back in. Yes, so the answer to your question is, with the cash which we have available, we would like to get back into the equity market. Yes.
Okay, so you're positive on equities in the golden year of the tiger, all the feng shui masters' warnings notwithstanding.
Yes, indeed.
Like
yes,
that. And I think they don't call it the golden year of the tiger, do they, in the Vietnamese context? This is Tet, right?
Yeah,
not the lunar year.
That's right. Yes.
But
yes.
Tet. Okay. Well, happy Tet to you.
Yes,
okay,
thank you very much indeed.
And this will be the
Thank
first
you.
of many conversations we have over the course of the year of the tiger. Khiem Do, Baring Asset Management Head of Asian Multi-Asset. Next to more.